Welcome back to another episode of 15 Minutes of Finance. I'm Brandon West, a CPA, and I'm going to help you keep more of your money. Today's topic is about another 4 years of the Trump administration and what that means tax-wise for middle and lower class America. I want to be very clear. Look, in our jobs, and specifically, I don't want to say our part of our job as content producers, because I don't really like that label, but as we educate clients in one-on-one meetings, as we produce this content to inform people about investment news, about tax news, it deals with the political. So there is no way for us not to talk about politics. It's just not separate enough from the world of finance and accounting because the president makes a lot of decisions. For example, we're going to talk about Trump's last presidency, the big legislation, 2017 Tax Cuts and Jobs Act. That dealt with a lot of areas of taxation, business, personal finance, all of these things, right? So we can't inform listeners about these issues without getting political. That being said, this is not an endorsement of a candidate. It's not an opinion of who we voted for or who we should have voted for. It doesn't even say that these things would be better or worse with a different president. So I just want to be very clear. We really don't want to enter the space of being political pundits. I do not want to be the next Ben Shapiro. Okay. That is not the intent of this podcast. That being said, I have to make decisions based on my best research and estimates about the intentions and the past actions of individuals and administrations so that I can do my best to inform people of what I think is going to happen and how people should prepare for the changing tax landscape. If my predictions and estimates go against what you think politically, awesome. I hope that's an informed opinion and I could be wrong. If it's not an informed opinion, I would just challenge you to wonder why you disagree with someone who, for all accounts and purposes, is an expert in the field of taxation, specifically for lower and middle class and small business owners, because that's what I've done exclusively for quite a while now. Okay, quite the preface. All that to say, I am going to make some arguments that are probably not what you usually hear in your usual political discourse. The primary thing being that you're hearing a lot that a Trump administration means more tax cuts, more incentives for his rich elite friends, right? Honestly, I'm not really going to disagree with that. We'll see not only Trump's previous presidency, but some of the things he's talking about now. There are some things that are tax savings for people in much higher tax brackets. In some cases, some people with quite a lot of wealth. That being said, where I think the disconnect happens in the political discourse around Trump's presidency is it is stated and assumed now by a lot of people because of how prevalent this narrative is, that comes with a trade-off for lower and middle class America. And I think what we're going to find and what I'm going to talk about here is that overall, Trump's past presidency, as well as his current proposals in this current presidency, are just going to cost the government money, because the reality of it is that most people are going to pay less in taxes. So the question is not like, oh, well, the middle and lower class is going to pay the brunt of this. We can't see that empirically. It's not a true statement. If that's what you believe, I'd encourage you to really look up why you think that's true, because the historical impact of Trump's past tax proposals have been a lowering of taxes and a simplicity of the tax code, particularly for lower and middle class Americans, okay? That doesn't mean that he's not giving tax breaks to the wealthy, because he is, okay? But there are a lot of things that middle and lower class America, lower and middle income class that is not the correct terminology. Lower class America, middle and lower income America. There are a lot of things to look forward to. Okay. So, let's dive into it. Okay. So the basis for this discussion is what Trump did in the past. If you think any politician is being honest to you with their campaign proposals, you're delusional. Okay. everyone exists for their own self-interest. I have long become far past cynical in listening to campaign promises for presidents or incumbents or whoever, right? So what I look at is what have they done in the past if they have a political track record. That was very hard to do with Trump's first presidency because he came from the business world. He didn't have a political track record. We don't know what he would have voted for. We don't know what policies he would have proposed. He didn't have a past presidency or vice presidency or anything like that, right? Now it's round two. We know what he did the first 4 years. So the primary policy that Donald Trump passed in between 2016 and 2020 is the 2017 TCJA, Tax Cuts and Jobs Act. Okay, so this was the main budget overhaul bill passed relating to taxes, budgets, all of those type of things. Okay, so there's a major provisions. It drastically, and I can tell you as a tax preparer, before, during, and after that legislation, it changed a lot of things. Okay, so let's talk about a couple of those. One of the main things that it changed was it reduced or eliminated a deduction that used to be called individual and dependent deduction. So I want to say at the time of the legislation, because it would change every year with inflation, it was like $39.50 or maybe $41.50, something like that, for you as an individual, personal dependency exemption, your personal exemption and then dependency exemption. So if I have 3 kids, I do 1 and then 2, 3, 4, right? So I take $39.50 times 4, right? So there was personal and dependency exemptions, and then there was also the standard deduction, which at the time was maybe just below or above $6,000. And then instead of that, you could take the itemized deductions. And that's still how our tax system works, right? You can either itemize or take the standard deduction. So one thing Trump's administration made a priority was simplifying the tax code for lower and middle income taxpayers. So what it did is it doubled the standard deduction. So now for most people, you didn't have to think about itemizing and collecting all of these. There might be some small amounts of state taxes from the DMV. You might have made charitable contributions to a bunch of different entities. You might have real estate taxes. You might have mortgage interest from your home. There's medical expenses. There used to be a category called miscellaneous itemized deductions that were limited to a floor of 2% of your income. And then there were things above that, including like work expenses that you paid personally for a W-2 job. Those were part of miscellaneous itemized deductions. A lot of those itemized deductions were eliminated. So the miscellaneous category was gotten rid of. The floor for deducting medical expenses rose. And the big one was, they call it SALT, state and local taxes. So taxes paid, state taxes on your W-2, local, there's counties across the country that have their own taxes. Things like that are all itemized deductions. Those are now capped to $10,000. So real estate, state, county, DMV, all of those taxes category, that SALT category, capped at only $10,000. So you can see pretty quickly it's hard to get when the standard deduction is doubled, and now with multiple years of inflation and adjustments, it's now for a married couple high 27, it might be over $28,000 now. So it rose a lot. So now when your taxes, which for a lot of people was the biggest component, especially larger income people who had more taxes on their income, right? So someone making $250,000 in California is paying $25,000 in state taxes, right? So that individual has, I think my math's a little off on that. Excuse, I'm not doing the math here, but it's a high amount. So then you combine, they have a big house in California. There's a lot of real estate taxes. They have a nice car. They pay DMV fees on. They could have a $20,000 to $30,000 total tax bill. That's now capped at $10,000, right? So it largely eliminated the itemized deductions for a lot of people. You either need a lot of medical expenses, you need to be very charitable, or you need a significant amount of mortgage interest that you're paying on your home to exceed all these expenses together, to exceed the standard deduction, which is now doubled, right? So you just get across the board for a married couple about $28,000. That's a substantial deduction. Most people are not itemizing anymore. So Did that overall hurt or help people? Well, the data shows that, again, because lower and middle income America does not have these massive bills for state taxes and home mortgages, they were largely across the board helped. So most of middle and lower income America was benefited tax-wise by the Tax Cuts and Jobs Act. And there were lots of other changes as well, right? Both that affected lower and middle income people, as well as there were things that caused a lot of the flack for him, quote, helping the elite, where, for example, the corporate income taxes. So corporate taxes for C corporations, this is the tax rate that Amazon and Apple and all these companies would be paying, right? These are corporations that have their own separate tax rate. It used to be a graduated tax rate, the same as individual tax rates are, okay? So the more money they made, the larger the tax rate. Trump eliminated that system and created a flat 20% tax rate. So that did reduce taxes for some of these big corporations. That made a lot of people upset, okay, because they thought, look, we don't need tax cuts for these rich corporations. They should be paying more. We should be helping middle and lower class, lower income America. So this really is the kind of crux of the issue with these two examples. And those were some of the big changes. One other big one we can talk about is the QBI deduction, qualified business income deduction. This was a big one for all the business owners I work with. So sole proprietors, S corporations, LLCs, partnerships, the owners of all these companies, they could deduct a deduction against their personal taxes for 20% of their business income. So it helps offset some of the taxes from that business income. Okay, so that was another one that definitely, I'm sure, helped some larger, very successful company owners. Although keep in mind, again, a lot of those big companies, almost all of them, they're C corporations. So they're benefited by that 20% measure. This QBI deduction doesn't relate to them. But there definitely are some wealthy people with S corporations and LLCs that were benefited by this. But largely what I saw in my tax practice is this was another measure that really helped people with jobs that they actually worked, like side jobs, or they're entrepreneurs. That's where they generate their income. And now it's an extra little 20% deduction to help lower their tax bill. Okay, so again, we can see, did some of the wealthy elite get benefited by Trump's plans? There's also criticism of how stimulus packages were held during COVID. That was another thing that happened during Trump's presidency, right? Where some of these PPP loans were huge loans to these companies that weren't struggling as much because they were very quickly able to pivot. I can speak to this as a very small company at the time. I wasn't able to get almost any of these loans. Either the funds ran out or there were eligibility rules of how long you had to be in business, or a lot of them were indexed on how much money you made. That's something that very much frustrated me. So I can understand some of the criticism of things Trump did in the tax world during his first presidency. I thought that was a horrible decision. All of the PPP funding and the COVID relief funds, they were to help businesses survive. So they should have been to offset costs, not to supplement income. So if there's a business that made $50 million last year and I made $100,000 last year, they shouldn't get 2,000% or whatever the math is more than me when they're already making money. I'm not saying they shouldn't get anything. That business is also being forcibly shut down by the government. I understand why there's some compensation there, but I think those rules should have largely been based on the costs of payroll, not the amount of money that the business made. So there are things that benefited wealthy businesses and individuals that I did not like at the time, and even sometimes publicly talked about on my Facebook page and stuff, and that I didn't think were handled very well. And some of that was state governments as well, but a lot of that was top-down legislation. So the criticism is justified in some ways. That being said, again, what we're seeing here is the now assumption, or now, I'm totally blanking on the right word. Sorry, I probably also sound terrible, and this is a good time to interject. That's why I didn't do an episode last week. I've had the flu for almost a week solid, chills, aches, fevers, the whole 9 yards. I'm still a little congested. I'm a week behind on sleep, so I'm totally blanking on the word. But it's the opposite of inferred, implied. There we go. The implication here is that, well, because the elite are being helped, the lower and middle income America, those people were the ones who bore the brunt of that tax bill. And we didn't see that. Okay. Again, we saw overall, you can look at the data, the Tax Cuts and Jobs Act overall created larger tax refunds and less taxes, particularly for lower and middle income America. So what we saw is just the deficit grew. I think Trump's presidency ranks, I just looked at this list, it's between 3 and 5. So I'm fairly confident when I was just researching this, it's in the top 5 presidencies that increased our deficit. So what we saw is just it cost the government a lot of money. He did not hurt lower and middle income America. So if you're worried about the debt, that's a valid concern in Trump's presidency number 2. If you're worried that you're low income and Trump's going to screw you over, there's no data to suggest empirically that that's what his policies are aimed to do. Okay. So let's talk about these new proposals. So this is probably going to end up being 30 minutes of finance. Okay. It's hard to do the news breaks in 15 minutes. So, as we look towards what we can expect to see change in the future, okay, we catapult off of what he's done in the past, and now we look towards both his empirical track record and his promises for the future that, of course, we take with a grain of salt because he's a politician. We don't trust any politicians here, okay? So, and there's a reason here why we're also talking about the Tax Cuts and Jobs Act in 2017 to springboard this future discussion, because one of the major things that he's promised is that he is going to extend some of these Tax Cuts and Jobs Act provisions that are expiring. So a lot of provisions when presidents or whoever pass legislation, there are some things that sometimes presidents change things. A lot of things are temporary and then they sunset. Okay, so they expire. There's the tax credits for electric vehicles is a good example of that. Okay, they've been extended multiple times because if you look at those original provisions, they were set to those tax credits for buying electric vehicles were set to expire, and then presidents extend them and they pass legislation to extend those provisions. So there are things in the Tax Cuts and Jobs Act that are set to expire. And so one of his main things to do here is to extend a lot of those. And he's changing some of them. So we just talked about that SALT deduction, right? State and local taxes. That's a big portion. That $10,000 cap on those expenses is a big reason why a lot of people don't itemize deductions anymore. One thing he's talked about is boosting that cap for people who have large state tax bills. Will that help the wealthy? It will. There also are a lot of people who are fairly, they're not wealthy. They're middle class America in a very high inflation time, living in San Diego, for example. Costs are way up. They are feeling their budget constraints, and they're spending a lot of money on state taxes here in California that will also help them. Okay, so this is, again, one of those things where, does it help the elite? It does. It also helps people like you and me. And so really it's just going to cost the government money. So again, the question, which I don't attempt to remotely be able to answer, it's completely out of my place to talk about. How do we deal with the deficit? Man, I don't know. Every president keeps spending more money. Literally all of them. Look up the deficit. It has been a long time since a president has not spent more money and increased the deficit. So where does this get paid for? I don't know, but it's not hurting you, most likely, if you're listening to this. Okay, so some other things for the that really help hardworking middle class type Americans. So he's talked about cutting taxes on tips, overtime, and Social Security. So that's retired people who are low income, very benefited by this. That lowers taxes on Social Security. I would guess a portion of Social Security is already tax free. So I would need to read what the actual proposal is when a bill is presented. My guess would be this would either allow you to earn more income than you currently can in retirement without forfeiting your ability for your Social Security income to be tax-free. That's what I would guess, because most people who largely depend on Social Security, their Social Security income is already tax-free. So there are some people who can pay Social Security taxes, so it might be that, but I would guess it's largely to help people be able to earn extra income to help pay bills and not sacrifice that Social Security element. Sure, there's a lot of people working double jobs, part-time jobs, overtime that are very excited to hear cutting taxes on tips and overtime. Okay, so that's great news. So I know he's talked about, I've heard some of these things he said about trying to create tax breaks for income earned in overtime. So people who are working 50, 60, 70 hours to make ends meet, to give them a tax break. So that's a big thumbs up to middle-class America. Okay. In tangent here, no, opposite of tangent is you go off on a tangent. So in line with a lot of the stuff that James has been talking about, where big Trump focuses so far have been on the big trade agreements, right? So he's talked about tariffs and taxes and things like that. So in line with this kind of America First agenda, he's also talked about enacting tax breaks for good mades in America. So for individuals who are worried about the cost of having to shift to local goods that are more expensive because there's now these high taxes and tariffs on imports, this would be maybe a way that rise in price doesn't really hurt your budget, because on the back end, you're getting a tax break for that spending. Okay, so that's great news for people who budgeting is a big thing, that how much they can afford to spend. Buying power is a big concern. When we talk about that, we're talking about lower middle income America. There is one, honestly, almost humorous, just because it's so specific. I do think it's a great thing. It in no way closes the gap on making the wealthy elite pay their fair share, but one like anti-rich agenda that he's outwardly talked about, which I thought was interesting, is eliminating tax breaks for carried interest and stadium owners. So this is a random thing. If you want to look into some of the tax breaks that help the wealthy elite, so to speak, this is a good example, and it's just interesting because it's so specific. But it does give us a good idea of what are some of these things that like the wealthy take advantage of that the regular person can't. This is one of those. Okay, so if you buy a sports team and have a stadium, okay, when you buy that team, usually that would be like an asset, right? Like, I bought the team for this much. Either that would be a stock purchase if the team is publicly available, which honestly, I think only the Green Bay Packers are publicly available, which is, I'm a Packer fan, go Packers. Next year's our year, baby. But I know that's something cool that Packer fans really like, that there's like a 30-year waiting list to buy stock when it goes up for sale to be an owner in the Green Bay Packers. So that's something that's kept their fans really engaged, is that a lot of people in Wisconsin have like 2 shares of the Green Bay Packers. They actually own part of the team. Most sports teams aren't. So that would be one way, though, to buy all the stock or to buy all the assets of the corporation. Okay, so in a normal deal, what would happen is part of that purchase agreement, okay, would be something referred to as goodwill. That's like the price you paid above the actual listed cost of the individual things you're buying, right? So if I buy Coca-Cola, right, they have factories and they have distribution centers and they have whatever's currently in inventory and they have all of these office buildings. But then let's be honest, if I'm purchasing Coca-Cola, I'm paying more than just for those things. I'm going to have to pay a ton because the brand name Coca-Cola is so valuable, right? It's freaking Coca-Cola. Who doesn't know, a cold thing of Coke? It's something interesting, actually, when you go abroad, there's people who have more access to Coca-Cola, literally, than clean drinking water. Like, it's crazy how widespread Coca-Cola is, right? So goodwill accounts for what I'm paying for just this intangible greatness of the company, right? That gets deducted over 15 years. Well, sports teams work a little different, that basically the entire cost of purchasing a sports team is amortizable over 15 years. So if I pay $5.4 billion for a sports team, 1/15 of $5.4 billion I get to deduct every year for 15 years, right? That's not how normal agreements are. Those would now be assets, and I would have basis in those assets, and those assets would be listed on my balance sheet as assets, okay? So it's very different. And that's a huge tax break. We're talking about their sport. If the Dallas Cowboys sold right now, it would be well into, how many figures would that be? 100 million would be 9 figures, 10. So it'd be 11 figures, well over $10 billion. The Phoenix Suns, when they sold, were seen as one of the smaller sports teams. Like they're not the Lakers or the Celtics or the Knicks, right? And it was, I want to say over $5 billion, for sure over 4. So we're talking about these massive deals. So it's these tens or hundreds of millions of dollars in yearly tax breaks. So that's something he specifically talked about wanting to eliminate. Now, is that the biggest problem with wealth disparity in America? No, it's not. I'm not saying this to say, no, he's going after the wealthy. He's probably not. Across the board, probably the wealthy will have a tax cut under another Trump presidency. But there are some interesting, I guess, unique ways that there are some things to try to offset these tax breaks. The bottom line is, as we kind of wrap this up, he's really trying to make America first and tax breaks for middle, lower income America, for the working class, the blue collars. Okay, so that's why he's targeted things like Social Security for people who didn't build really wealth in their life and rely on that Social Security income. Tips, so tipped workers who are working in restaurants. That's one of the main things people talk about when we talk about like initiatives for middle class, is like restaurants. It's a massive industry across the country. You're not seeing a lot of waitresses who are upper class, right? So tips, overtime. Okay, so people working overtime, most people in executive positions, they're exempt from overtime, right? So all of these are initiatives designed to help middle and lower income America save money. So cut through all the noise. There are a billion things that a president accomplishes and is responsible for. You might disagree or agree with almost all of them Trump takes. My goal is to educate our listeners in the realm of tax and personal finance. Historically, Trump helped lower taxes for middle and lower class, gosh darn it, middle and lower income America. His things he's talking about are extending those same initiatives and more things that would benefit lower and middle income America. That's what I see happening. Tax-wise, I think it will be a great 4 years. Long term, does the budget exploding and the deficit skyrocketing again hurt us? Maybe. Do the tariffs hurt international trade? Maybe. I'm talking about what I know. What I know is I prepared tax returns for 4 years of Trump's presidency. Literally, I was a tax preparer for all 4 years of Trump's first presidency, okay? What I saw was lower taxes. What he's proposing now, I would say, would lower taxes for the people that I work with. So I would be optimistic, and these are the areas that I would say will be improved tax-wise over the next 4 years. So have some hope here. I know it's very doomsday out there. I'm not going to say the doomsday is right or wrong. I do think there is harm to overestimating damage over and over and over, and just making every single person, when they log in online, they're just surrounded by negativity. I do think it can be depressing and overwhelming. And so hopefully this is a little bit of positivity. I'm not saying nothing bad will happen during the presidency or that some of these initiatives are not misguided. What I'm saying is, if you're someone who is either living paycheck to paycheck, or maybe you're middle America, you've got some savings, you're nothing special, you've got your home, you've got a steady job, you're trying to make sure you retire healthy, you're middle of the road in this country and you work hard. The initiatives he's promising and the initiatives that he's passed before, you should have a very optimistic look on your taxes. And there definitely will be, from everything I've seen and everything that I estimate, positive tax changes for you. If you're super upper class, there are also some benefits for you, okay? So haven't really spent time talking about that. Some of those Tax Cuts and Jobs Act provisions are things like increasing and maintaining those increases in the estate tax limit, where individuals can leave $15-20 million for their heirs completely tax-free, where it used to be in the realm of about $5 million. So there's lots of people who will get tax breaks, to be completely clear. But for people who are mostly worried about tax breaks, who need their budget to survive, we can be pretty optimistic that these should be a decent 4 years for you in the tax department. Hope you enjoyed listening. Hope you appreciated kind of the opinion here and the projection of what we can expect. It's just my best estimate based on my experience in this industry and what I've seen in the past politically in these areas of taxes and budgets passed by the previous Trump administration. So I'm optimistic in the tax department. I hope you are too. As always, please share these videos, like any of the videos, subscribe to the channel on Apple, Spotify. We really appreciate all of our listeners. Again, video content coming soon. I'm rolling paint. I'm setting up the studio. It's almost there. We're very excited. Hope you keep listening. And as always, invest early, invest often. We'll see you next time.